The crazy show continues there in the stock market. We got some interesting things to call out today. At the end of the episode, I have a specific chart for ARK Innovation Fund that actually looks like a decent setup, easy trade to manage. We'll be getting that towards the end. I'm going to kind of walk you through all my thought process, what took place in the markets today, kind of give you a good idea as to where the market might be headed next. If you're new here, that's what I do every day. This is the daily stock market brief show. I use technical analysis and intermarket analysis to really understand what might be taking place next. Now, before we hop into today's show, I want to thank the patrons that keep on coming into the channel to support me. 361 active patrons that signed up, and I have a $9 tier that I do trade ideas, so I can walk you through some just trade ideas that I'm looking at, and I even let you know when I enter into them and when I hit targets and et cetera, et cetera. I'm working currently on setting up a Discord channel for those patrons, so kind of create a little active community where we could bounce ideas off one another. So I'm excited to do that. Also, thanks to all the active subscribers that are in the YouTube channel and smashing that like button, giving comments, et cetera, et cetera. We just reached 79,000. The milestone that I'm really excited to hit is hitting that 100,000 where, I could get one of those YouTube plaques. I always thought that'd be really cool. So thanks again for all your support. It means the world to me as I transitioned out of my full-time career to do this. Let's go ahead and hop into today's episode. All right, everybody, welcome back. We're going to start here at the market dashboard. And what do we got going on? Well, green. Every sector in the green. Holy moly. And we got some crazy price action. Look at financials up there at top. Consumer staples and communication services. This is interesting to me. Interesting development, okay? Because technology and communication services for the last 4 weeks have been laggards. We'll get into that. But financials here taking the top spot. I'm going to bring up the BKX on the 30-minute time frame. Look at this vertical move here in the month of May so far. Really, actually, we shot up in a pull. We had this little... Probably, actually, I would consider that a little diamond pattern right here. And then we broke out to the upside, slight negative divergence. Typically in the month of May, only 35% of the time, based on seasonality, does it outperform the S&P 500. Well, right now it's doing exceptionally well. It is getting a little frothy here, but that doesn't mean necessarily anything at this particular point in time. We got to keep just a close eye on that. Now, this is an important thing to note. Okay, these are the sector weightings for the SPY. You can see the 11 sectors in here, and you can see just a couple of big ones, okay? Technology is 23.4%. So these last 5 or 6 trading days in the S&P 500, they've been relatively flat, right? Well, it's because technology also is one of the bigger weightings in the SPY, and it hasn't been doing all that well. We've been breaking down some key levels. Another one to show is communication services, 11.83%. So this makes up for 35-ish% of the sector of the weighting for the S&P 500. Now, if I bring up this chart here, you can see 4 weeks ending May 3rd. In the middle here, this is from percent change from high to low, the 11 sectors and the S&P 500 right there. Notice how it's right here is up 1.8%, okay? And then right here, you have those two sectors that hold a big weight, communication services, slightly up, and then technology is that laggard. So you can see here, it's very hard for the S&P 500 if it doesn't have, if it has this big anchor right here. So the biggest anchor in these last 4 weeks has been tech, and that's really been holding back the performance for the S&P 500. So it's something to pay attention to as we're going through here, because I did mention that ARK Innovation Fund, right? And I did mention that I do potentially see some strength coming in, which we'll get into that. Now, when I bring up the relative rotation graph, this is on looking at the sectors here, 4-week tails, and you can see the 4 different areas: improving, leading, weakening, and lagging. You can see the little worms floating around, where you can kind of see financials weakening ever so slowly right here, but it's still within that leading category. And you have XLB creeping up here, which that's been doing good. We've been talking about that, and XLI. And then there you see XLC right here, and XLK has been that laggard, continuing to go weakening right here. A couple other ones that I want to take note of is just the XLP and the XLU. We did see XLP today do pretty good, right? Finish second here. And what's interesting to me is typically when you see utilities and you see XLP moved from improving to leading, you typically see weaker performance take place in the S&P 500 as the other ones rotate out in these defensive kind of risk-off trades here. Utilities, water, electricity, etc., things that people need. Start to go into this leading category during weaker times. So during these dips, these pullbacks, from a relative standpoint, XLP and XLU did significantly better than the 11 sectors. Now, what fueled all this move today? Well, potentially the US dollar was a partial portion of that. You can see it is, typically from a seasonality perspective, the dollar shows some strength. Today was a weak day, and that probably fueled this big move here in the various indices, as well as gold here broke out of this flag. You can see here, it is starting to really move. It got above 1800, up 1.76% on the day. Now, the last time we saw a big move like this, it was followed through a big red day. So we'll continue to kind of keep our eye there on this move and see if it's another one of these just fake out, plays here as the dollar, found a little bit of weakness today. Also to note that tech did pretty decent as well. They finished up right there in the 4th spot, and you can see here the yields were slightly down on the day. Not by much. It still could be very well potentially flagging, or if it is taking a breath here and heading lower, that can really fuel that tech rally as we've seen. And also, we've seen that also fuel gold. And what I mean by that is August, the 10-year right here, the blue line, it hit a bottom on the 10-year and started moving up. And then same thing with the price of gold. We noted that in August right here, that was when it peaked out and it started heading lower. Meanwhile, the 10-year yield continued to press higher and higher. So we'll continue to watch just to see how that develops. Another asset that really performed well today was silver, up 3.6%. A lot of the miners did exceptionally well. It's breaking out of this just little basing, potentially even inverse head and shoulders right here, which could put a target easily close to around, anywhere from 2850 to 2950. That kind of zone up there would make sense as it breaks out of this neckline. So we'll continue to watch how that develops too as well. But so far, it's looking pretty good. Now, the Dow Jones Industrials was absolutely crazy. They put in that all-time high. Still have somewhat of a slight divergence, and you can see it's running up to this little area of resistance here. But we've been saying this has been in very bullish context. The price is above all the moving averages. It's above the 5, the 20, the 50, the 100, the 200. They're all sloping up. Now it's been in this tight consolidation and it's currently breaking out. When I look in the 30-minute time frame, you can see it kind of flagged right here intraday, and now it just went vertical on us. Now this bottom box here can act as an area of support because we broke out of that, and we can see a lot of volume right here to the left-hand side. Also to note, it's getting very, very frothy. So, could be setting itself up for, a potential little correction here before it heads higher. Just to take note, when it gets to these high extended, readings, it could stay there for a little while, but we typically see little pullbacks take place. So if you're looking to go long, you don't really want to do so on a very overextended reading. It doesn't really make all too much sense. So what you got to be careful for is if we get a big gap up, and we get even more overbought, and then you might see people sell into that momentum into eventually an area of support, and then they could potentially cover or add long, and then you could see that bounce take place. Now, if I zoom in even more on the 5-minute time frame, just look at this tight little channel here that it broke out of, and that's crazy. Just like, what is that? It's a pretty nutty move, that's for sure. 5-minute candle, so each candle represents 5 minutes. You can see the RSI is at 84.58. So yeah, not frothy at all by any means. Probably not the best entry point in my personal opinion there, but we'll see. S&P 500 on the daily time frame too as well saw a pretty strong day today, up 34, which is 0.82%, but it's still within this kind of choppy box. So we'll continue to watch how that plays out. We still have a little bit of resistance up overhead. We haven't hit an all-time high yet, but it does look like we can very well set up for an all-time high. You can see here broke out of this area that was previous support, then it was resistance, and we broke out with a lot of movement to the upside. Still not overbought on the 30-minute time frame, and there's a possibility. I didn't want to draw this in, but there's a possibility that this was a little inverse head and shoulders, which says, hey, we can shoot up to 423, on the SPY for, just above 420 there, which would make sense on a full measured move. So we'll be looking out for that. Something that interests me though, from more of a bearish perspective. Now don't put much weight on this. This is the NIAD. We're looking at internals, but this is the 1-minute time frame. But what I thought was pretty interesting was Just look at that big candle on the very last minute of trading. The internals just completely fell off a cliff here, and you can see the last minute of trading in the SPX went completely vertical. So to me, that's a little odd, but I don't think you need to put too much weight on it. But it is worth noting. The sell signal I'm bringing back because we're just now about to cross back over that red line right here, which is at 0.8. So this is the CPC, the put to call ratio, and we smoothed it out with a 10-period moving average. And typically when it crosses below this line, it's more of just like okay, let's just, pay attention for when it crosses back above the 0.8 from the downside to the upside. That is quote unquote a sell signal, or just really a time to just be aware. And you can see here, it's not always accurate, but it crossed above here, and then you saw the market roll over, crossed above here, you saw the market go up and then roll over. Here it just rolled over. Right here, it didn't really do much. You can see that it just went down slightly, recovered, came back, and then went higher. And then right here, really didn't do anything at all. We crossed the line up, and it was immediately, shortly there, crossed back down below. But you can see it went up and then kind of sideways. So it looks like we're about to cross through this. Does that mean that the market's going to sell off? Nope, that doesn't. We've seen it happen before, so it's just a warning sign. It says, okay, make sure that, if you're long in positions, make sure you got some stops in place. Take profits in these overextended areas, and just have it as a warning sign. Meanwhile, when you look at breadth is completely dead right now. It's almost non-existent. We're at minus 2.96 as the market really did rip up higher today. And then also to note, the percent of stocks above the 200-day moving average. I should bring this up on the 50-period moving average to see what that looks like. I believe it's a negative divergence as well. You see pretty strong day, but you can see that the percent of stocks above the 200-day moving average dipped today, which is interesting, but still keep in mind it's a very high reading. We're at 92.38 of the stocks are above that, so still a very high reading. From a VIX perspective, nothing much has changed here either. We saw a spike up, but then we crashed down. Friday's coming into tomorrow, which is technically VIX Crush Friday, so we'll see if the VIX just gets crushed. We have that risk ahead of us for basically, if you have puts, or if you're trying to short the market, I guess that would be a considered risk. But you have this gap below us and this one that have the potential of getting filled. So at that point, what I like to look for is if we do get spikes in the VIX, I want to look for long positions and potentially fuel those with a little bit more of a position size. If we start filling these gaps ahead of us down here, it's more of like, okay, I'd be looking to take some profits, or even potentially cover a short down here. I'm sorry, not cover a short. I would cover shorts up here or go long, and then over if it comes down to the downside, I would like to take some profits off the table, or potentially even look for short setups. The last thing that I want to kind of get into here, a couple more charts, is the BP-NDX. Now, this is why, I pointed out why technology sector, it's been a laggard, over these last 4 weeks. It's down. It's one of the only sectors that are down. It's a big weighting on the SPY, and we're setting up for an area where we could potentially see tech kind of reverse itself. You can see here on the BP chart, the RSI is getting to that oversold territory. It can stay there for a while. I'm aware of that, but it definitely might be setting itself up for some sort of move to the upside. What I'd like to see is these positive divergences. So we'll see if that does play out here, get a new positive divergence, and that could push it higher. When I look at the Qs, you can see here we had a positive divergence on the RSI. You can see that the price hasn't really gone anywhere. It's just been chopping back and forth, and it really hasn't recovered this zone up here. We have that gap above us, so that can still, that's an area of resistance, right? 334 to 336 on the Qs, still a very strong area of resistance. So to me, it seems like the market wants to take this back up into that channel. We'll see if that happens. If we start closing, we came down here to 326, this previous area of support where this gap was. I think that if we crack through that, I think we can head lower, but we're not there at this particular point in time. What's also interesting to me is the semis. They make up a big portion, weighting on the NASDAQ composite, and we've been actually talking about this for a while. We broke out, and we traced this down, and we drew out this pink box saying, okay, if the price comes down here, that could be a potentially good entry. We had this hammer candle right here, and we're seeing a little bit of follow through. It's still nothing confirmed yet. It's below the 5 EMA, but I feel like if we capture that, if the bulls recapture that, I mean, this could very well be a very good entry point for some semiconductors. So we'll see here, if that plays out. From a risk versus reward standpoint, it already makes sense to me. The last thing I want to point out is the ARK Innovation ETF. This, has been getting ripped to shreds. This is the 2-hour time frame, and just late February, we fell from a high of 160 where we're at right now, right around 105. But what I want to call out here is price broke down through this, bear pennant, this little symmetrical triangle right here, and we pulled back into this previous area of support here, and you can see a little bit of a zone of resistance as well. Once resistance is broken, it then becomes support. Last time we were at this level, we ripped from 105 to a high of 120, 130, let's just call it. Also to note, the positive divergence. Okay, it's still oversold here, which is interesting to me. And the positive divergence, every time we've seen these positive divergences, they've played out to pretty big moves, as you can see right here too. We saw it move up right here, right, even right here. This little positive divergence moved up. So perhaps this is telling me, okay, this looks like it's very possible to see some sort of a bounce take place from here. But regardless, from a risk versus reward standpoint, even for it to break down further, you can have a stop loss clear as day right below 105, or even potentially a little bit lower given your risk tolerance. And then your entry is right by, a few dollars above your stop loss. So to me, that makes sense. And you can potentially, have an easy 3-to-1 risk versus reward ratio trade right here on this specific fund. And if we do just get some monster rally, all the better for those long positions. But if if it breaks down, okay, you're not really risking all too much. So to me, that looks fairly good at this particular point in time. But we'll continue to watch it, see what plays out. If you're a Patreon, I'll let you know if I enter into it. I haven't yet, but I am considering it. So, all right, everybody, that's all I have for you on today's episode. Hope it helped out. I will see you back here on tomorrow, I believe. I'm going to try to get out the weekly recap tomorrow instead of Saturday. So I will see you then.